Let's talk a little bit here about the potential effect of policy changes, or I guess maybe just keeping current policies in place on this sector. This is a sector that has seen this coming. Has anything really materially changed in your view and how these companies should be looking at the potential for an increase in tariffs or other types of export controls?
Yeah. So the tariffs, not so much, I think, at least not directly. You have to remember the direct trade in semiconductors, raw semiconductors between the U.S. and China is actually not that big. It's only a couple of $1 billion in each direction. In the context of a $500 or $600 billion market, it's not that big. Most semiconductors go between the countries inside other things. The bigger issue, I think, was the export controls. And we did have some potential changes from the Biden administration. They've already, and by the way, I think it impacts not so much the semis, but the semi-cap players, the tool vendors. The U.S. vendors have already been operating under some fairly significant export controls that have prevented their ability to sell leading-edge tools to China. However, there are other non-U.S. companies where the U.S. has been trying to get the same kind of cooperation from them, and they've been a little hesitant. And so there were some news stories that suggested the Biden department was considering applying something called the Foreign Direct Product Rule, right? Which I won't go into what it is, but effectively it would enable the U.S. to effectively implement something akin to those same export controls on the non-U.S. companies. I am a little confused why the U.S. semi-caps are getting nailed on it, if that is what they are getting nailed on today, because to be honest, it doesn't really affect the U.S. Semi-cap players at all. If anything, it levels the playing field. The U.S. guys are already playing with one arm tied behind their back anyways. Would bring the international guys down to the same level. But that's the export control piece of this.
Yeah, I mean, you would expect, a Taiwan Semi or ASML to maybe be affected by this, but we are seeing gains in sort of more domestic-oriented firms like Intel and I think Global Foundries.
So that's a different issue. So there was.
Okay.
This was, I think, more the Trump comments on Taiwan.
Okay, go ahead.
And Bloomberg had an interview with him, and frankly, if you read it, I think the initial read was like, uh-oh, he doesn't care as much about protecting Taiwan, which is not exactly what he said. What he kind of said was he didn't want to do it for free, which is not exactly the same thing. But I mean, clearly, I think protecting Taiwan is important. But I think that's why you're seeing most of the semiconductor players out, and you've got Qualcomm and the like that are getting hit because they all rely on Taiwan for manufacturing. And you're seeing the U.S. focused guys, the Intels and the TIs and maybe even the Global Foundries, which have been relatively stronger today in the wake of a weak sector because of. So I think it's more the Trump comments versus the Biden export controls on those.
There's also the narrative, Stacy, that tech has really outperformed. I know that semis have had maybe a rockier time, but tech has outperformed, and we're just reversing that. How much of that do you think is playing in to the sell-off today?
Yeah, so semis in general have had a very strong year, right? And we've seen valuations and everything get very high. The sector itself, even after the pullback today, is still trading at more than 30 times forward earnings. And I think relative to the S&P, we're probably at decade-long highs in terms of relative valuations. And so things, people have been playing like it's the AI theme, and people have been playing sort of the bottoming theme with some of the analogs. And I do get a little concerned that maybe, as things recover, we've already started to front run some of that recovery, at least in the valuations. And so things were already slightly stretched. And clearly, we've been seeing some rotation out of the space into some other areas, just given the kind of performance we've had. So like everything else kind of piling on top of a space that's a little bit stretched already, I guess I'm not incredibly surprised at what's going on. It was probably bound to happen at some point, especially given earnings is getting ready to kick off very soon.
Well, looking ahead to some of those earnings, particularly out of some of the end users, the corporate end users, whether it's PC makers, phone makers, and whatnot here, is the only story, because when we talk about this big rally we saw in the SOX and all its members, it all seemed to be around that AI narrative. Is there more, though, to that story from a valuation perspective beyond AI?
Yeah, so the valuations are two things. One is some of the AI stocks clearly have run, although if you take the AI stocks out of the SOX index, the semi index, valuations are still very high. And some of that is because we've got a lot of names that have actually been cutting numbers, and the stocks didn't go down. And this is not necessarily unusual. Like semiconductor investors do like to buy cuts. They like to buy bottoming things, but usually the stocks go down first. And this time the stocks in many cases didn't actually go down. And so if you've got the stocks being stable or even going up as the numbers are going down, the valuation mathematically goes up. And so that's part of what we're seeing as well.